The U.S. stock market closed at fresh record highs today as investors continued pouring money into artificial intelligence and technology stocks. The S&P 500 and NASDAQ both moved higher during the trading session, continuing the strong momentum that has dominated Wall Street over the past several months. Investors remained highly focused on technology companies, especially businesses connected to artificial intelligence, semiconductors, cloud computing, and data center expansion. Market analysts say AI remains the biggest growth story in the financial world right now, with billions of dollars continuing to flow into the sector every single week. Large institutional investors, hedge funds, and retail traders are all increasing exposure to technology stocks as confidence in long-term AI growth continues, strengthening across global markets. Many experts believe artificial intelligence could become one of the most transformative economic developments of the decade, similar to the rise of the internet and smartphones. Leading the rally once again was NVIDIA, which continued its incredible run on Wall Street by hitting another all-time high ahead of its upcoming earnings report. NVIDIA has become one of the most closely watched companies in the entire stock market due to its dominant position in the AI chip industry. The company's advanced graphics processors are being used by major technology firms to power artificial intelligence systems, machine learning tools, cloud infrastructure, and next-generation computing platforms. Analysts across Wall Street raised their price targets on NVIDIA shares, saying demand for AI chips remains extremely strong as companies around the world race to expand data centers and artificial intelligence infrastructure. Several investment firms stated that demand for NVIDIA products continues exceeding supply, showing how aggressively businesses are investing in AI development. Investors are now watching closely to see whether NVIDIA can once again exceed expectations after becoming one of the most valuable companies in the world. Other semiconductor and AI-related companies also posted strong gains during today's market session. Chip makers, cloud computing firms, cybersecurity companies, and software developers connected to artificial intelligence all benefited from the continued optimism surrounding the technology sector. Many traders believe the AI boom is still in its early stages, which is why investor interest remains extremely strong despite concerns about market valuations. Meanwhile, inflation concerns returned to the spotlight after new economic data showed producer prices rising faster than expected. The latest inflation report increased fears that the Federal Reserve may need to keep interest rates higher for longer in order to fully control inflation across the economy. Rising prices continue impacting businesses, consumers, and financial markets as investors search for clues about the future direction of monetary policy. The report showed that costs for goods and services increased across several important sectors of the economy, raising concerns that inflation pressures may not disappear as quickly as markets previously expected. Investors are now debating whether the Federal Reserve could delay future interest rate cuts if inflation remains stubborn during the second half of the year. Some analysts believe the central bank may wait longer before reducing rates, while others expect economic growth to eventually slow enough to ease inflation pressures naturally. Treasury yields moved higher following the inflation data, as traders adjusted expectations for future Federal Reserve policy decisions. Higher bond yields can sometimes create pressure on stocks because borrowing costs become more expensive for businesses and consumers. However, technology stocks continued showing strength despite rising yields, highlighting the massive investor confidence currently surrounding artificial intelligence and innovation-driven companies. In a major development for U.S. monetary policy, Kevin Warsh was officially confirmed as the new Federal Reserve Chair, replacing Jerome Powell. Financial markets reacted cautiously to the announcement, as analysts expect Warsh to maintain a more aggressive stance against inflation. Investors are now trying to understand how the leadership change could influence future interest rate decisions, economic policy, and financial market conditions over the coming years. Market experts say the Federal Reserve remains in a difficult position as officials attempt to balance inflation control with economic growth. If rates stay elevated for too long, economic activity could slow significantly. But if the Fed cuts rates too early, inflation could rise again and create additional problems for the economy. This balancing act continues creating uncertainty across Wall Street and global financial markets. Traders are now closely watching upcoming Federal Reserve meetings for signals about future interest rate decisions and the overall direction of the U.S. economy. Any comments from Federal Reserve officials regarding inflation, economic growth, labor market conditions, or monetary policy could have a major impact on stocks, bonds, cryptocurrencies, and global markets in the weeks ahead. For now, investors remain focused on corporate earnings, AI growth, inflation data, and Federal Reserve policy as the biggest factors driving financial markets. While some analysts warn that volatility could increase in the near future, others believe strong technology earnings and continued AI investment could help